that same type of processing power?
Yeah. Fundamentally, ChatGPT came out last November. It takes 3 quarters to get a chip out of the market. It had a huge impact on demand for AI chips. NVIDIA was there, and it's just taken them a while to get the product through the production cycle. And, that is, I think, why you had such a big increase in guidance for the July quarter. And I think sorry, go ahead.
Well, when we get to the next, I think we don't get AMD's earnings until I think maybe the first week of August. But so we got a ways to go. But once we do get there, do you think that earnings report, and more importantly, the conference call and the commentary from the executives, is going to maybe be a little bit more bullish, or at least along the lines of some of the bullishness that we heard out of NVIDIA last time?
I think you are going to hear them emphasize their AI product line and the momentum that they're seeing in the market, and they should be fairly positive on their AI products.
What type of a market share do you think that they can gain?
Certainly, just to be a second source, typically market split 80-20, they could easily get to a 20% market share in AI. And if they have very competitive products, they could do even better. If you look historically at AMD's product portfolio, they have a GPU. NVIDIA has a GPU was used for AI. Those products went into adding graphics cards. Back in the day, AMD had 40% share. They now have about 18. I think as they improve their software stack, I think that they can easily get back to 20, and depending on how things pan out, they could do even better.
I am curious about kind of what is being bought and why it's being bought. One of the criticisms I think we saw over the last couple of months about some of the gains that NVIDIA had made was the idea that a lot of folks who are buying these GPUs are kind of still in a testing phase, meaning these are companies that are just kind of trying to figure out how they're going to incorporate AI either into their own business or into their clients' businesses. But this wasn't necessarily a bet that somehow this is going to be the future. When do we make that transition where these companies that are buying this stuff are going to say, okay, we're not just testing this out, we are making a longer-term commitment, a longer-term capital spend in this space?
Yeah, now that's an interesting and difficult question to answer, but let me see what I can do. Fundamentally, you're getting an exponential increase in the cost of AI, and it's very difficult to see how that continues, for more than another couple of years. And these companies really haven't figured out their business model. They don't know what they're going to do, but it's very clear that AI is going to be a big part of the future. And, how I see things playing out is you're going to get a lot of experimentation. You're going to get a lot of people building up AI models and figuring out business models. It'll just take a while for that to happen. In the near term, there's going to be a lot of deployment and a lot of development.
All right.
And sales of a lot of chips.
All right, Gus, really appreciate you taking time for us. Gus Richard there, analyst over at Northland Capital Markets, an upgrade on AMD, a price target now at 150. A lot more coverage coming up here on the big program. Stick with us. This is Bloomberg.
Replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed, vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg.
Apple, well, maybe it's going to take its sweet time getting those mixed reality headsets into stores. The tech giant planning a retail launch of the Vision Pro headset in select U.S. markets early next year before maybe expanding it further. Bloomberg's Mark Gurman, of course, has been all over this story. He joins us now with the latest. And Mark, I think we all knew this was going to be kind of a niche product, at least at the outset. But this actually seems a little bit too niche.
Certainly a niche product. This is one of the only times Apple's going to be launching a major new product in only one market, the US, before waiting several months to expand it. When the Apple Watch launched in 2015, it launched in countries, including the US and the major ones. The iPad started in the US and then a few weeks later expanded. The iPhone, as we know, launched in 2007, US only, and then expanded gradually. It took a while. It really kicked off a year later, so this is more like the original iPhone. But the news about the retail stores is interesting. They're going to be building new experience areas inside of flagship, metropolitan located retail stores, LA, San Francisco, New York, etc. You're still going to be able to buy the Vision Pro in any of the 272 US retail stores, but those new areas for demoing, testing the device, those are going to take some time to roll out.
What do we know right now about sort of the technology in this, how far along Apple is in not just developing, but making sure that it's ready for prime time when this is available in the stores?
From a hardware perspective, the hardware is pretty much nearly final. The issue they're running into right now is twofold. One is software, the other is testing. In terms of software, there's a ways to go for Apple to rope in engineers from other parts of the company to finish up development of converting many of their iPad, macOS, iPhone apps from those devices to work on the Vision Pro. There's a lot of work to be done behind the scenes with developers to get their applications converted to the Vision Pro. In testing, there are some concerns that the device may be too heavy for people with smaller heads or smaller bodies. Some people have trouble keeping the headset on for more than half an hour or 45 minutes because of the aluminum frame and carbon fiber frame. They're working on another strap that goes over the top of someone's head. They didn't show the strap in the video of the device that you're showing, but that's something they have behind the scenes. And that's going to be an optional accessory as well. So they are looking to mitigate both those software and those weight concerns right now.
An optional accessory, does that mean they're going to charge for an extra head strap, Mark? Is that what you're saying?
They have not finalized the plan for that head strap.
Yeah.
There's some consideration for charging extra for it because they don't believe that all consumers are going to need it. Only some people will want it. As you can see in the demo videos that you're showing right now, the man using the Vision Pro does not need it in that case. Right. But in some cases, people will need it.
All right. Well, he's got a big head, Mark. So he's doing all right. All right. Well, we're all looking forward to this rollout. Of course, Mark Gurman always all over the details on everything going on with these rollouts from Apple. Maybe potentially early next year, we'll be able to get our hands on that. Meanwhile, we set you up for the final hour of trading here on this Friday afternoon. A market.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
TGIF, everybody. Actually, it's a Jobs Friday. Carol Masser along with Matthew Miller. You know Matt is in for Tim here on Bloomberg Business Week Live in our Bloomberg Interactive Brokers studio on YouTube on Bloomberg Originals. It is Friday. I wrote May 7th, but it's actually June 7th.
July 7th. It's July, Carol.
How did I write May?
I don't know, but you think we're still in June.
I blame the AI in my document program that just filled it in on me.
Yeah, you know, AI is wrong about
me.
Almost everything lately. I use
Really?
ChatGPT a lot, and it gets everything wrong.
That's not good.
I asked it for a 7-letter word with all the vowels, and it kept giving me 8-letter words as its answer.
That's a major boo-boo.
Yeah.
All right, so coming up, folks, we've had a bit of an equity rally, though we're mixed and little change. So we're going to get into the jobs report, what it all means, maybe for Fed policy and the outlook. We're also going to check in with the CEO of American Staffing because temp work, Matt, can be a great indicator about what's going on in the labor market. We are going to talk also with Swan Bitcoin's Terrence Yang.
Yeah, that's very interesting because he thinks the price of Bitcoin is manipulated by big players out of China. That's not an uncommon, I guess, conspiracy theory. But if it's true, we're never going to get a spot Bitcoin ETF approved.
Yeah, U.S. regulators might have some problems with that.
Yes.
All right, we're also going to get into Blackstone seeing opportunities for private credit as tech growth slows. And then we're also going to...
By the way, everyone sees opportunities in private credit.
Wait.
So
when you don't know what to do with your investments, go all in on private credit. And then, of course, we are going to talk about the Barbie movie, Mattel's risky bet on a feminist Barbie movie and how it just might work.
Of course we're going to talk about the Barbie movie. Why wouldn't we?
Is it because of Margot Robbie?
Is that? I was thinking about Gosling, but yes, Margot Robbie is also in it. Are you going to actually see it?
I think I will. I don't know if they'll go to the theaters. I mean, I don't know. And then we're going to talk about what Matt Miller is driving because some pretty cool cars
It's
he
purple.
always gets. It's purple. All right, countdown to the close, though, folks. Starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic joined now by Scarlett Fu, as well as our colleagues Carol Masser and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Interesting day here in U.S. equity markets. A modest rally, Carol, to end the week. And some of the big gainers out there. I'm going to steal your thunder. The Chinese ADRs, the Chinese Golden Dragon Index.
Don't do it,
its
Romaine.
best day in more than a month.
Thank you so much for the setup. Yep, definitely some outperformers there. And by the way, thank you, Scarlett, because I heard while I was away, you actually did this, I think, a little bit in my
homage
honor.
to you.
All right, so China, again, outperforming. You've got the NASDAQ Golden Dragon, China Index up 3.7%. Folks, you know what it's all about. We've been talking about it all day here at Bloomberg. Chinese regulators imposing more than $1 billion in fines on tech giants and Group and Tencent Holdings, but that's a lot. It is a lot, but it signals an end to a crackdown on that sector that had really wiped out billions of dollars in market value and derailed the world's biggest initial public offering. So shares in Ant affiliate, we're talking about Alibaba soaring, leading the group higher. So Alibaba's up almost 9%, Tencent's up more than 4%, and Baidu is up about 4% as well, Matt, in today's session.
So I guess this means we're going to continue to hear a lot more about Chinese dragons from you. Every day on this simulcast, tune in for the Chinese Dragon Report. I'm looking at the job numbers, and I mean, they were still really good, but they didn't beat for the first month in 15. I think this chart is the one you'll probably see most often when you look at the Bloomberg terminal searching stories on jobs. It's not terribly exciting, but it shows that we're still looking at growth, but it's moderating, right? In terms of job ads and in terms of wages, 4.4%, so a bounce back to some extent, but not as much as we saw in the heady days of 2021 and 2022, and the same can be said for growth. So I think this report cements the idea that the Fed's going to raise again, but it doesn't freak markets out like the ADP report did yesterday.
Yeah, absolutely. Here, let's take a look at what's going on in the broader markets here, Matt. On this day in S&P 500, higher by about 0.3% here on the day. Meanwhile, seeing similar moves in some of the other indices. The Nasdaq up about 0.5%, but the Russell, that's your big outperformer on the day, up about 1.7%.
Yeah, and it's interesting, given that the Dow is the laggard there, that industrials are doing fairly well. They're one of the better performers. If you look at the 11 sector groups, they've actually dropped now to number 4. You've got energy leading the way, up by better than 2.5%, as the group recovers from yesterday's drop triggered by ExxonMobil's profit warning. Industrials higher, led by airlines, and of course materials gaining ground with 28 out of 29 members in the green. On the flip side, consumer staples, healthcare, utilities, those are your laggards, and they've been weak all day long.
Yeah, I think it's interesting some of the moves that we've been seeing in the energy space here. ConocoPhillips kind of representative of that, up about 3.5% on the day. One of the best days for that stock going back to early April. Meanwhile, to the downside, you have Eli Lilly and the rest of the big pharma space, if you will, moving a little bit lower here on the day. And then Levi Strauss, so interesting earnings report that came out yesterday after the closing bell here, showing some weakness there in demand and consumer spending demand. Now, whether that's something very specific to Levi and its genes, and more a broader concern here about consumer spending remains to be seen here. Of course, it's going to be a while before we get the next crop of big retail companies reporting earnings. And then keep an eye on Mattel, a big story on the Bloomberg terminal today about a big movie release that I think we all have our eyes on. The Barbie movie, which comes out in about a week's time. A lot of people expecting the tie-in there with Mattel and the branding to maybe have some potential benefit to that stock. Let's go back really quickly to the macro here. Matt, you were just talking about the jobs numbers that we got this morning here, and I thought one of the more interesting things, at least if you're a pessimist, is the idea of sort of all those big upside surprises that we had in the labor market data. 14 straight months of that did come to an end. For the first time in 14 months, we actually had a downside surprise in those jobs reports. Whether that starts a new trend or not remains to be seen.
All right, but what's interesting also is, remember, wages came in a little bit hotter than forecast, and also in terms of hours worked also came in a little bit hotter than forecast. I think our Mike McKee saying a bit of a mixed report here, so some strength as well as maybe some weaker expectations when it comes to the U.S. labor market. Having said that, we all talk a lot about the connection between the labor market and a recession. Can we have a strong labor market and yet go into a recession? And Bruce Richards, who is the CEO of Marathon Management, he caught up with our TV colleagues earlier today and talked specifically about that.
One of the things we've been studying is going into a recession. Do you see signs of unemployment starting to tick up prior to the recession? And the answer is no. Unemployment's always strong. Go back and check all the prior data of all the prior recessions. Unemployment's always been firm going into a recession, and where it starts to weaken is when a recession starts.
All right, so something to think about as we go through labor data like we did this morning. Of course, that's Bruce Richard. He's the CEO of Marathon Asset Management. So just interesting, right? You know, in terms of the conversation, Scarlett.
Yeah, definitely. And that's why so many people say look at the high-frequency data like weekly jobless claims to give you a better read on when the labor market starts turning. Because, yeah, when you start seeing actual changes in non-farm payrolls and the unemployment rate, we're already knee-deep into it.
Yes, but of course, we're not really seeing those kind of changes, right? I mean, the unemployment rate has stayed the same between 3.5 and 3.7 for months. We're still adding 209,000 jobs, which is massive. And the ADP report yesterday, which looks at very small companies as well as the big ones, saw huge gains. So companies, I think, that had 50 employees or fewer were adding the most amount. It just looks like the job market continues to be on fire, even if it didn't beat the expectations. I mean, obviously, they're going to raise their expectations if they miss 14 months in a row.
Yeah, but there's still some issues there here. I mean, I thought that diffusion index that everybody seems to be passing around showing some sort of, I guess, if you say narrowness, if you will, and where those jobs are being created in the leisure and hospitality sector, but not anywhere else. And then I think Michael McKee had been our international economics correspondent and sent around some great data showing some of the disparities now that we're seeing on demographic levels in terms of the unemployment rate going up for Hispanic workers, for black workers, or I should say people who aren't working, and meanwhile it's going down for white men and women. So there's a disparity there that I think has to be reconciled.
Yeah, there's the devil's always in the details. I want to go back to that idea about economic surprises, right? I mean, economists had missed the mark for 14 straight months. They finally caught up with the data. And I wonder if this marks a turn in the economic surprise index and just in general with people ratcheting up their expectations for where the economy is. And they've gotten to a point where now the economy is going to underperform those expectations.
Great point to end it on. But we're going to be back, folks, in less than an hour's time. Our simulcast, catch us on radio, TV, YouTube, and Bloomberg Originals. We're going to count you down to the close on this Friday, Beyond the Bell at 4 p.m. Wall Street time. The number coming in, certainly non-farm payrolls, softer than forecast. The unemployment rate coming in as forecast, but we did see an uptick when it comes to average hourly earnings and also average weekly hours worked. So let's get to it and see what our roundtable has to say, Matt. Yelena Shaletyeva, senior U.S. economist at BNP Paribas. She joins us in our Bloomberg Interactive Brokers studio, along with our Steve Matthews, economics reporter at Bloomberg News. He's out there in our Atlanta bureau. Steve, Yelena, happy Friday. Yelena, great to see you back here at Bloomberg headquarters. So talk to us about the report. Let's go through today before we start looking forward. How did you assess the numbers that we got today?
Well, this was a classic example of don't change your forecast on ADP, right? So that's the first thing that comes to mind.
It was so off. Right?
Yeah, they were off. They track, things differently. But this report is telling us that things are slowing down. They continue to slow down. That nothing is urgent. Recession is not imminent. But at the same time, there were signs of weakness in this report. And Matt, you listed a lot of good things. Let me tell you, there were a few weak things in there as well. So what
was the weakest thing? I mean, if you look, Carol is talking about temporary work, which I agree. If you look at that chart, it's no bueno. But what did you focus on?
In addition to that, you should look at aggregate hours worked for the second quarter in aggregate. So if you look at that, you see that aggregate hours worked only grew 0.1% quarter on quarter seasonally adjusted annual rate.
It's because everybody's using AI. We don't have to work as hard.
That's a disappointment.
Yeah, that's a disappointment. That number is correlated really well with GDP growth. So that is telling us that economic growth is slowing down. So we're at 1.5% in terms of GDP projections for Q2. We'll get the number pretty soon, actually. And then, what happens in the second quarter? We think that we're going to go into a downturn. And
so wait, you think second quarter growth is going to show 1%?
1.5%.
Which is kind of amazing because that feels like nothing or sounds like nothing, but it doesn't feel like nothing, right?
No, 1.5% is pretty good. I mean, the first quarter was 1.3% until all of a sudden it was 2%, right?
Especially it's an annualized number as well.
Yeah.
So you just divide it by.
Steve, jump in here and tell us what your read on this report is with regards to the Federal Reserve that you cover so closely.
Well, the Feds will see this report as basically confirming their plans to hike in July. I mean, they had been pretty much set to hike, and there's nothing in this report that's going to change their mind. That you have, there are, as Yelena points out, there are some weaknesses in the report, but on balance, job creation is still running much higher than trend, much higher than the trend that they want to see. You see the unemployment rate going down. You see wages, average hourly earnings, rising. Hours for this month rising. So it's there are lots of points where the hawks can look at this and say, hey, this confirms our view of where the economy is. The goal of the Fed right now is to create below trend growth, and that would reduce pricing pressure, and they would like to see some small increase in the unemployment rate. That's not happening. This report is more consistent with very solid growth and a solid labor market. And so July, absent there being some shock in the consumer price index next week, July is set that they're going to hike by a quarter point. And the real question is what happens in September and November and December. And, there's a lot of interest among the FOMC in hiking at least one more time beyond July.
I totally agree with Steve that July is right there. There's no question about that, and average hourly earnings growth totally supports that. The question is about what happens next, and I think this jobs report alleviates some pressure that they absolutely need to feel. They need to go in September or November as
Whoa!
So I think
really?
I think they will
raise
stop.
rates.
No, they
stop.
will. No, they alleviates the pressure for them to do that.
Okay,
so I think that that July hike will be the last one. They will reach the terminal rate there, and by the time we get to the September and November meeting, there won't be any need to do more hikes.
No more talks of pausing; they'll just be done.
So
Yes.
one and done is your take.
That's our forecast.
Steve, in a market environment and a world where I feel like we've been all over the map already here in 2023 in terms of interest rate expectations, you agree with Yelena?
I think that is a very reasonable take, and in fact, that Eric Rosengren, the former head of the Boston Fed, who was known as a hawk when he was at the Boston Fed, which was only, I guess, 2 years ago, he was saying one and done. So it's like, there is definitely a segment of the Fed that will be on board with that. There are one or two people, including Raphael Bostic of the Atlanta Fed, who say no more hikes. So, right now, there are pieces of the data that you can look at and say, the economy is resilient, it's strong, you're still seeing a lot of momentum. And then there are, as Yelena points out, there are some areas of weakness. So you're going to see some splintering between the hawks and the doves. It's been amazing that Chair Powell has been able to pull off, this big increase in rates without there being any dissents in recent months. And, you might start to see some splintering as you get near the end of this rate cycle.
And we kind of saw that in the minutes a little bit, right?
Absolutely. Yes.
So maybe I think he's going to want to try and keep decisions unanimous, right? Even if they don't agree, up until the point that he convinces them to agree for the sake of unanimity, which seems like
there's cracks.
kind of BS to me. But Yelena, let me ask you about the economic surprise index. And we have obviously on the Bloomberg ECSU, but there are other economic surprise indexes, and they're all sky high. I mean, if you take out the very beginning of the pandemic, when we just started dumping trillions of dollars out of helicopters, we haven't seen the economic surprise index this high since 2017. Is that going to turn around now? Is this the moment?
I think we may be seeing the moment, especially in the labor market. I think there are a lot of questions about how the data are reported, like in terms of seasonality and everything. So one thing we haven't talked about is seasonality of payrolls. We have seen significant support from seasonal factors in the first half of the year. But by definition, if seasonality pushes it up, it should push it down in the second half of the year. And I think we saw a turn in today's data as the seasonal factors are starting to subtract a little bit more. I think we will see more of that in July and in September. And I think we did see a turn in the labor market.
All right, so let's move forward to next week and the CPI report. Steve, how important, I know, I feel like every Fed chief has their favorite inflation indicator. CPI isn't necessarily it, but it's still an important one, right?
CPI is very important. It's not the official target for the Fed, but it comes before the PCE index, and it's super, super important. And what's going to be interesting next week is the headline number is going to come down to maybe, if you look at the Bloomberg consensus, 3.1%. It could be, some have it as low as 3%. These are the lowest numbers in more than 2 years. The Fed's going to be focused on core inflation, excluding food and energy, and that has been sticky. The Fed has been very worried because core inflation has been very slow to come down in the first half of the year. So this is going to be key in terms of, are they going to finally see some progress on core inflation? But for most Americans, the overall inflation is what matters. And if you get a number that's around 3%, that's getting really close to normal for most people. And it's like, wage gains have been in the area of 6% if you look at the Atlanta Fed's wage tracker. So people are starting to, with gas prices coming down, people are starting to get real wage gains. So it's like that should have some kind of impact on how people feel about,
right.
You know, confidence has been really bad of late.
And confidence is key, right? I mean, Yelena, how important is the consumer inflation expectation to what the Fed wants to do?
Well, it's crucial.
Yeah.
So, and if the Fed sees inflation expectations being contained, that will just help.
They were down when the U of M number came out, right?
Absolutely.
Out a year, 3%.
Yes, yes, and gasoline prices could help if they go down a little bit from here. I think what we really, the crucial point here is the labor market. It's, you know, a little bit about inflation, a little bit about this and that, but what happens in the labor market is crucial. You have to keep those, you know, dollars coming in.
If you have a job.
If you don't have a job, you know, that's it. You're not going to continue spending, and things we will see they will cut.
Well, they can't get, I mean, they can't get much better, right? So they can only get worse, but they have to get much worse to really make a difference. I mean, 3.6% unemployment.
You know, I'm just going to say Barbie would already have it at 2% inflation.
Yeah, you think?
Right.
I don't know the Barbie story, but I
Steve Matthews, thank you. Have a great weekend. Yelena Shalecheva, so great to have you in studio again. This is Bloomberg Radio.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks well off session highs. The Dow is lower. Both the S&P, NASDAQ, they are pushing higher. NASDAQ 100 index up as well, but perhaps the standout is the Russell 2000, up now by 1.7%, while the Dow is down 47, a drop there of just about 0.2%. S&P 500 index holding on to a 9-point gain right now, up by about 0.2%. The NASDAQ Composite Index up 60 points right now. That is a gain of just about 0.4%. Bottom line here, stocks are trimming gains in thin trading. Treasuries fluctuating, the dollar slumping after soft hiring data ease concerns that the Federal Reserve will have to ratchet up its fight against inflation. 10-year yield 4.05%, with the 2-year 4.93%. Reaction to the jobs report this morning from Lindsay Piegza, chief economist at Stifel.
Well, I do think it fell well short of expectations, but that being said, it's still a solid headline number. And for the Fed, the focus is not that top-line non-farm payroll report. They're looking at the details. They're looking at the inflationary components.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Right now, gold up $14 the ounce to $19.25, a gain of 0.7%. Bitcoin now down 0.2% to $30,206, while West Texas Intermediate crude oil is up 2.8%, $73.78 a barrel. Sweet Green shares, they are up again yesterday. They jumped after jumping 15% yesterday, the largest one-day gain in more than a year after Bank of America upgraded the stock to buy from neutral and raised its price target to $17 from $9. Today, we are seeing Sweet Green shares already at $15.47, up by 2.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, Carol Massar along with Matt Miller. We are live in our Bloomberg Interactive Brokers studio here.
We're just loving this gorgeous summer day, aren't we?
It's gorgeous.
It's beautiful outside.
I wonder what it feels like.
I thought it was going to be overcast. Oh, you haven't gone out yet?
I haven't been out since this morning.
I went out afternoon to take some pictures of the car.
Oh, deep tease,
cool.
Deep tease what Matt Miller is driving. We're going to have fun with that. Right now, though, we want to stay with the U.S. labor picture because the temporary help service payroll.
Well, yes. Should I just round up what we saw in terms of the numbers today? Because I think it was still a pretty amazing number. We had a change in non-farm payrolls. It was a gain of 209,000, which normally, that's a big gain. We were looking for 230. That was the survey. And remember that we'd beaten in the last 14 months. The number beat the survey. So obviously people continue to up their numbers for the survey. And now we finally missed.
And the temporary help service payroll, though, declined again. It is considered as a leading indicator for the unemployment rate. So let's get some thoughts on that, because back with us, is Richard Walquist. He's president and CEO of American Staffing Association, a trade association representing the American staffing industry. And he joins us on Zoom from Alexandria, Virginia. Richard, good to have you here with Matt and myself. So, remind us of your members and then what you guys are seeing when it comes to the U.S. labor market.
Sure. Hello, Carol. Hello, Matt. So our members are sourcing talent into every industry in the United States, including NGOs, and a big piece of the business for the industry is in the government sector. The industry literally sources talent into every occupation in the United States. And you're exactly right, Carol. People take a look at our industry because we are a leading employment indicator, which is to say that traditionally, and of course every economic cycle is a little bit different, and this one's been very much different, but traditionally temporary help is a leading indicator when the economy is beginning to heat back up again and employer confidence is picking back up again. We're a leading indicator as we see economic uncertainty. And so what we've been seeing over the past several months, very typical of this kind of a segment in the economic cycle, is employers have been dialing back on their use of flexible talent as a first-tier strategy, as they're kind of taking a good, hard look at what might be ahead. At the same time, we continue to hear reports that they are adding to their talent benches, and that reflects, I think, confidence in what's ahead, whether we've got a bit of a soft landing, a short and shallow recession. They're confident. They want to hang on to the talent that they've got.
Wait, so they're pulling back? I'm a little confused. They're holding on or they're pulling back?
They're pulling back on, so they're dialing back on that flexible outer ring of talent. So these are temporary and contract workers, and so they're dialing back on that. At the same time, we're talking to CEOs that say they still continue to get orders for full-time talent. I think that the job numbers reflect the fact that we've got job openings in America. The JOLTS numbers indicate we've got 1.6 job openings for every unemployed job seeker. But here's the other thing, Matt and Carol. Not everyone that's seeking a job has got the skills that employers currently need. So I'm hearing from our members that talent is still a scarce commodity in terms of certain skill sets in certain industries.
Are you hearing that people are coming back in the labor force who had been sitting it out during the pandemic? Yelena Shilieva was just with us from BNP Paribas, and she was saying, women especially are starting to come back into the labor force now.
Women have actually been the winners, Matt, over the last couple of the BLS reports. We're seeing uptick in terms of number of women that are part of the labor force. Labor force participation rates are stagnant. I mean, they haven't really moved much in the last several months, and they continue to be well below the levels that we saw pre-pandemic, roughly running at the levels we saw in the 1970s. Fact of the matter is, a lot of people have left the labor force. If we were running the same labor force participation rate as we were pre-pandemic, we'd have another 2 million workers in the labor force or actively seeking work. So yes, women have been a winner here. Employment amongst minorities, especially Black Americans, has ticked down a little bit.
Well, yeah, actually, we had some stories that Black workers accounting for 90% of the recent U.S. unemployment jump. So, once again, we're seeing as things maybe change a little bit, or we start to maybe potentially be at a transitional point, potentially maybe in the labor force, that once again, some of the minority groups being hit the hardest. So, Richard, the reason we like talking with folks like you is you have these industry members, and so you get a good cross-sampling of what's going on. So do your members talk a lot about recession? Just trying to figure out kind of where, as we had a soundbite from the head of Marathon Asset Management saying that, you typically don't see the unemployment rate go up until after we are in a recession. So I'm just curious, are they talking about recession? Are they concerned about it? Just curious.
So the level of concern, always concerned about a downturn that turns into an absolute recession, but the level of confidence in the state of the economy has gone up, I think, exponentially, Carol, over the last 18 months. People have been talking about that recession. It's going to happen 6 months from now, 6 months from now. But between labor markets and consumers spending, stubbornly, pieces of the economy just aren't cooperating with some of the forecasts. Back to the labor force participation rate, I think what's most encouraging is that in the 25 to 54-year-old segment, considered to be prime workers, that labor force participation rate has actually gone up. But around the people that are on the sidelines, younger workers and older workers, way too many of them on the sidelines. And I think that it should be a priority for both the public sector and the private sector to find ways to bring these folks back in. Regarding minority employment,
we had a great piece on the Bloomberg yesterday, the Bloomberg Big Take, I believe it was, and it was just talking about all the factories that are being built in the United States, but that the technical skills, that there are workers that, that they're going to be needed in those factories, but they're not going to have the technical skills to take on those jobs. And is that part of what you guys are working on, or?
Absolutely, a very big way. So the upskilling and the reskilling, the retraining of America has become a priority in most sectors. And our industry is working both with the clients and with government to find ways to make make it really a reality. We've given lip service to lifelong learning for as long as we've been part of the labor force, but we have never seen so many changes within occupations. And the big change is now that employers are really focusing on skills, not so much job descriptions, not so much degrees that have long been associated with kind of entry-level requirements to get a foot in the door, really focusing on skills, and within the skill sets, then going in and saying, look, we're going to have to do some upskilling here in terms of the impact that technology is having on now, we believe, some 35% of jobs. It's going to impact some 65% of jobs over the next few years, and it's got to be an absolute priority.
All right, going to leave it on that note. Richard, have a good weekend. Richard Walquist, he is President and Chief Executive Officer of American Staffing Association, on Zoom in Virginia. Matt, we'll see what happens. I feel like, companies have been afraid to let go of workers, right? We've talked about worker hoarding and so on and so forth because they're worried about being able to replace those workers, but we'll see if things start to slow down.
Well, the interesting thing, I think, is hours worked, as Yelena Shirleyeva pointed out. And when she did, I started digging a little bit deeper into it. It just hasn't expanded in the second quarter. And I made a little bit of a joke about AI kind of taking some of the productivity away. But that's what you're going to start seeing in probably the not too distant future.
I'm also thinking about, I was at a store yesterday here in New York City, and I checked myself out, and it was a clothing retailer that I've never done that before. But it's just, I think you have more and more places that just can't find workers, and so they're automating stuff, right?
Or they want to do it that way, right?
Yeah, or they want to do it that way, exactly. And I thought that was pretty wild.
That is what was
the
the clothing store?
I'm not going to tell you.
Oh, come on.
I'm not going to tell you.
All right, well, maybe you'll tell me during the
But I actually had to take off the security sensor. Like, it was crazy.
That's nuts.
Isn't that nuts?
That's
but you
nuts.
put all anyway, we'll talk more about it later, maybe. All right, let's get a check on world national news. Over to Nancy Lyons in our Bloomberg 99.1 newsroom in Washington. Take it away, Nance.
Thanks, Carol. The U.S. is confirming it will provide thousands of cluster munitions to Ukraine to help it bolster its offensive capabilities and to help it push through Russia's front lines. The munitions release scores of small bomblets that may not explode and could pose a risk to civilians. National Security Advisor Jake Sullivan says that risk is warranted.
We recognize that cluster munitions create a risk of civilian harm from unexploded ordnance. This is why we've deferred the decision for as long as we could. But there is also a massive risk of civilian harm if Russian troops and tanks roll over Ukrainian positions and take more Ukrainian territory and subjugate more Ukrainian civilians because Ukraine does not have enough artillery.
Sullivan says Ukraine has promised to use the controversial munitions carefully. Well, President Biden will be heading overseas next week for a NATO meeting, but his first stop will be in London. Bloomberg's Leslie Vinjamuri says he'll be building support for Ukraine in his meeting with UK leaders.
This is a very important trip symbolically for the United States and United Kingdom as they approach that very important NATO summit, to have what in effect is a pre-meeting at the highest levels, with the president meeting the king, obviously meeting the prime minister, and demonstrating the solidity of this relationship.
Bloomberg's Leslie Vinjamuri in London. Ahead of next week's NATO meeting, the allies have agreed to a new pledge to spend at least 2% of their GDP on defense. 11 of the 31 allies are expected to meet that goal this year. The Justice Department has spent over $9 million investigating former President Trump. That's since the appointment of special counsel Jack Smith in November. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P trading little change right now. The Dow giving up earlier gains, but the Russell 2000 holding higher by 1.5%. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in a very choppy session post the jobs data. Dow is currently down 74 points now. S&Ps, like you said, are a little changed, and NASDAQ is higher by 32. The U.S. 10-year yield at 4.06%. The 2-year yield is at 4.94%. Gold is up 14, oil is climbing, and Bitcoin is down by 0.4%. Of the main 11 S&P sectors, leaders were energy and the materials, consumer staples, and healthcare were under pressure. And leaders to the upside in the Dow, Caterpillar and 3M, while Merck fell 2.3% and led to the downside. In deal news, private equity firms are vying for Ball Corp's aerospace unit. And wrapping things up, Zuckerberg said that Twitter competitor Threads has 70 million signups in just 2 days. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just under 18 minutes left in today's trading session, getting ready to wrap up the Friday trade as well as the holiday shortened trading week. And we've had equities kind of bouncing around here, and same thing for the Treasury trade coming off of that monthly jobs report. We've got a great market guest, and looking forward to see what he has to say. And joining us right now, I should say, is Vance Howard. He's Chief Executive Officer and Portfolio Manager at the registered investment advisor Howard Capital Management on Zoom. It is a Friday on Zoom from Texas. Vance, good to have you back with us. And I should point out several of your funds, the Tactical Growth, 90th percentile over the past 3 years, the Income Plus Fund in the 98th percentile year to date, the HCM Dividend Sector Plus, 96th percentile in the past 5 years. So some really outstanding performance.
You're killing it.
We like to see performers. We like that. Real numbers. How's this environment? How do you describe it right now?
I think you've reached a new bull market. You know, the trend went higher in January. We're 100% invested now. I'm bullish, and I'm pretty optimistic about the outcome for the next 2 quarters of the year. You know, whenever you have the market up 10% or more in the first 2 quarters of the year, the odds are very, very high that the last 2 quarters will be higher, any from 8 to 10 to 12%. And there's a lot of reasons for this, but we're bullish. We're 100% invested. Now that we're invested, we're starting to rotate our money to different sectors that we think will outperform, or different stocks, and we're very optimistic.
So, I mean, the S&P has already had a pretty killer year, right? Can it really get much better, or do you expect, the narrow breadth to simply broaden out?
I think the narrow breadth's going to start to broaden out. I mean, clearly it's been led by 5 or 6 stocks, but you can start to see that starting to broaden out now. And you look at, breakouts like Visa and others, and, Boise Cascade broke out in the construction area, and some of those stocks are looking very attractive to us. I think it's going to broaden out. I think there's $5.5 trillion of cash on the sidelines. You've got enough cash to fuel this thing much, much higher than what it is now. I think there's more cash on the sidelines than there were in 2008. And coming out of 2008, you almost had a decade-long bull market.
But let me ask you something, Vance. You know, when you've got a 10-year at 4.06, a 2-year at 4.9, so just below 5%, that starts to look kind of interesting, for an equity investor, and maybe without some of the, problematic concerns about higher rates and what it does for asset valuation. So what's your argument, fixed income versus the equity play?
Well, I know we've got an inverted yield curve. I see it just like everybody else does, and we may end up having a mild recession. I don't know. Nobody can really predict that. Everybody's trying to game that right now. But you got to trade what's actually happening in the market. This is one of the biggest mistakes I think fund managers, investors make, is they want to predict instead of looking at what's happening right this minute, because that's all we know. Well, right this minute, the trend's up. You got to be in until the trend changes. Stick with that thesis, and I think you'll make a whole lot of money going forward.
So what's the best strategy? You run a number of different strategies, but what do you like right now for, are you looking for gains, capital appreciation here, or are you looking to conserve? Do you like dividends? What's most interesting to you?
Well, we don't have a lot of high dividend paying stocks or value stocks right now because they're just not working as well. They worked well last year in the nasty bear market, but right now you got to play what's working, and that's mega cap, that's tech, and you got to stay right there until that changes. Some of the sectors that are working a little bit over the past handful of days, not that we own that much of energy, but again, trade what's working, do more of what's working, less of what's not, and mega caps work and tech's working. And everybody's always trying to find the next silver bullet here, but sometimes the obvious is where you need to be, and that's the obvious.
So why do you need to be in Monster Beverage right now?
I like the little stock. I think that it did reasonably well. It's had a couple of acquisitions. I think it's a little bit of one of those stocks that appears to be broadening out. I like the technicals on it. And how long we own it, whether we own it a week, a year, who knows? We'll see what happens with that talk.
But you own it now, right?
We have a little piece, yes.
So you like that? You like Visa? What was the other stock you mentioned?
Biogen.
I really like Boise Cascade. Boise Cascade's a little company with the symbol's BCC, but it broke out of a nice 52-week high. Now, I love 52-week highs, guys. I love them. I love them. I love them. Let me tell you why. You cannot double your money without a stock breaking out to new 52-week highs all the time. So it's pretty hard to do. But they're a construction company. They sell construction supplies. They've got a great balance sheet, well managed. I think construction is going to do well. Even if we had a recessionary environment, what happens with building materials? Well, people have to fix their own homes. They go out and buy different 2x4s and paint and caulk, and these are the kind of things that they sell.
So it's really interesting because we spend so much time talking about macro. It kind of makes me a little crazy because who the heck knows ultimately how it's going to play out. But what you're saying is look at the technicals, look at the fundamentals of some of these names. And I am curious, do you think this earnings season is potentially going to be something that can provide some momentum upside downside because we're going to start getting some more specifics on each of these companies?
That's a great question, too. And I think that the earnings came out really quite well over the past couple of months, the past couple of quarters, and they do not seem to be slowing down. You had a strong jobs market, so that means plenty of people have jobs out there. There's plenty of money being made, a lot of cash on the sidelines. I don't see that the interest rate being risen the way that it is affecting earnings at all. I think that these companies are making money hand over fist, and I think people need to really focus in on that. And I think they really need to try to stay away from the negative and look at the positive, because if we are in a new bull market, the best gains are in the beginning phases of a new bull market.
Speaking of bulls, I got to ask you about cattle. We have seen a lot of, the hottest month on record in June, right? We've seen a lot of farmers rotate out of soy into corn, so feed is more expensive. The herds are smaller, and you have some cattle yourself, right? We've seen the prices just soar this year. Beef prices have. You have a take on that?
I do have a take. I just had 4 baby longhorns about 2 weeks ago, so I've got 4 baby longhorns on the ground right now, and cattle prices are doing well. Cattle, it is hot here in Texas, but cattle do fine in hot weather. We're fine with that.
I was just wondering about, because we look at the price increases, not just for beef, but also for pork. It's done really well. Everybody's trying to switch over to chicken right now. They're a lot easier to raise. But I just think this is something that's getting a lot more attention than it typically does on Wall Street.
Well, that's an interesting question. Usually people don't ask me about the ranch, I could say.
That's why we love Matt. Hey, Vance, real quickly, I'm looking at your Tactical Growth Fund. I get it. There's a lot of tech in there, the QQQs, NVIDIA, Meta. I mean, you're really all in on technology, aren't you?
And it's working. It's working this year. We got our first buy signal in January, so we started moving back into the market. We were heavy into cash last year. Last year was a very challenging market to trade due to the volatility, and we did our best to trade through it. Did a fairly decent job, but when you look at the relative strength, you've got to go into tech. You've got to go into AMD. I've been telling people to buy NVIDIA back when it was at 140 a share.
Yeah, Microsoft, Apple, these are all in that fund. Hey, listen, always fun to catch up with you and talk tech or talk cattle. It's always fun.
They own and operate the Bar C Ranch. That's why I asked.
I know. Vance Howard of Howard Capital Management. Be well. Joining us on Zoom in Texas. This is Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. Late day fade now with the Dow, the S&P, NASDAQ all back in the red. Meta platform shares down 0.4%. Meta's new social media app Threads has garnered 70 million users in just 2 days after its launch, a sign of enthusiasm that CEO Mark Zuckerberg said, quote, was way beyond our expectations. Now, Threads launched on Wednesday as an alternative to Elon Musk's Twitter, which had 237.8 million users as of July 2022, but has also been beset by controversy. Meta, meanwhile, continues to sign up subscribers at a rapid clip. 100 million is a distinct possibility this weekend, according to Mandeep Singh, senior tech analyst for Bloomberg Intelligence.
You know whose record it's set to break? ChatGPT's, because it took ChatGPT almost 2 months to get to 100 million monthly active users. Guess what? At this pace, this thing can surpass that easily.
Apple is planning a slow rollout for its $3,500 headset. Apple will be launching its Vision Pro headset with appointments and in-store promotion in select U.S. markets early next year, underscoring the niche and complex nature of the mixed reality device. Levi Strauss lowering its guidance for the full year. Levi Strauss shares down now by 7.7%. Those are some of the top company stories we're following for you at this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody. Just got about 4.5 minutes left in today's trading session. Carol Messer along with Matt Miller. Matt, of course, you know, in for Tim. And we're going to head over to Scarlett and Romaine in just a moment and count you down to the close on this Friday and just wrap up the trading week. In the meantime, we did hear Charlie talk about Threads.
Ugh. Here's the thing.
You played with it, right?
So, okay, I signed up for it, and I was really looking forward to it because you know that I kind of despise Twitter. And the reason I don't like Twitter is because it's just so many incredibly dull political debates going on there. You know, I don't really care what you know, Joe Plummer or Mr. Wall Street's political opinion is. It just doesn't really move me, especially if it's over something
So that's not going to happen on Threads?
So I thought maybe Threads will be different because it's from Instagram and it's more like...
Because nobody's ever political on Instagram.
Well, aside from Stephanie Rule, I don't really follow many people who are political at all.
Well,
it's just people posting pictures of their cars and what they're eating, and I was having fun with that.
Stop right there. Don't you think that part of when it's political, it's depending on who you follow?
Yes, part of that is.
I use TweetDeck, excuse me, and so
or the other one,
depending on the day. No, but I follow a lot of different news sources, and I'm very particular about who I follow, and it's a really great way when things are happening to track stuff.
Okay, so here's a great example.
And I just weed through the
on Twitter,
garbage.
Right? I love David Gura. Used to work here, works at MSNBC.
Who doesn't love David
He's brilliant. NPR
yeah,
also.
Very thoughtful.
Brilliant. On Twitter, a lot of political stuff. On Instagram, pictures of his cute family. That's why I like Instagram better. But yesterday on Threads, he posted some debate about whether Eric Adams was actually friends with a former cop that got shot and whether the picture that he keeps of him in his wall
Don't you
is
hate
real.
on David Gura?
I just was like, David, this is the same kind of dull political banter that goes on Twitter. Why are you posting it on Threads too?
Why do you think it's going to be any different?
Well,
That's exactly what they want it to be.
Now I don't. So now I just looked in.
And guess what?
Into it. That was my
It's Mark
experience.
Zuckerberg and IB saying, thank you, Matt Miller, because this is exactly what I want.
Yeah, well, now I'm going to deactivate my account.
Okay, good for you.
It's like exactly the same as Instagram.
There's 69,999,000
other people who are going to find, wait, this is the exact same thing we do on Twitter. There's no difference at all.
All right, right now, we're going to head over to Romaine and Scarlett, wrap up this trading day beyond the bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. And here to help take us, Beyond the Bell. It's a global simulcast with Carol Massar and Matt Miller. Welcome to our audiences across all of our Bloomberg properties, television, radio, and originals. The last time we spoke, Carol, markets looked like they were heading for a pretty solid day here.
Right.
But since then, in the past hour, some selling heading into the close. The Dow, the S&P, and the NASDAQ now in the red.
Yeah, really a late day fade here. Matt and I have been talking about it, trying to figure out exactly what's going on, because it looks like if you look at the Treasury trade, it's pretty much kind of stayed where it was when we were talking about an hour ago. But Matt, definitely you're seeing the equity selling on volume that is a little bit light.
It's a little bit light. I was messaging with some traders to try and figure out what happened, and a buddy of mine wrote in simple lack of interest. It's like a dull Friday. There's not a lot going on. I guess he can say that, now that we're, 8 hours past or 7 hours past.
Maybe everybody's on Threads, and that's
the NFP number. I don't think everyone's on Threads because it's the same thing as Twitter, and as they find that out, they're gonna quit one or the other, I hope. In any case, you don't really see a lot of action in the markets other than you did see a big buy and a big sell on the S&P, and now we're kind of back where we were yesterday.
Yeah, absolutely here. I mean, it'll be interesting to see how things, if at all, change next week here on the back of some interesting economic data and, of course, the start of an earnings season where a lot of people are going to want to see whether the corporate fundamentals can match some of the multiples that we've seen expand over the last 6 months or so. We get the closing bells here in New York on this Friday afternoon. It is going to be a down day and a down week here. Modest losses, though, to be sure. A Dow Jones Industrial Average lower by about 0.5%, an S&P 500 lower by about 0.3%. The NASDAQ composite looks like it's going to finish the day roughly down by about 0.1%. But if you're looking for a bright spot, you did see some of those cyclical and transportation names hold on to their gains on the day. Dow Transport's up 1% on the day. The Russell 2000 up 1.2.
Yeah, and remain kind of an even split when you look at the S&P 500, 251 to the upside, 252 to the downside. And if you're looking for some outperformance, Matt, the KBW Bank Index up almost 1.4% ahead of those big banks reporting next week.
Yeah, I actually, I said not much going on, but there was a real rally in oil prices as it looks like the OPEC plus cuts are finally starting to have some effect on the market. I did a double take when I looked at NYMEX earlier. I thought WTI was Brent because it was over $73. That's why you see the energy index rallying the most of all of the 11 sectors here. Materials following it up as we get a little bit of a rally in other underlying commodities. Industrials, as Scarlett mentioned, also doing well today. The losers are consumer staples, healthcare, and utilities. I guess that is at least good news if people are selling off the defensive stocks.
All right, everybody, let's get to some of the individual gainers in today's session. Top in the top in the NASDAQ 100 is Lucid Group. It's up another 5% in today's session. The late June rally continuing for this one, up 8 out of the past 9 days since June 23rd, since announcing that deal with Aston Martin, a strategic supply agreement for high-performance EVs. So again, a top performer in the NASDAQ 100. Rivian, another EV company, it's up about 14% here at the close at its highs, up almost 19% today, advancing for an 8th straight session, matching its longest win streak on record. So up quite a run. I'm not quite sure I have these numbers right. Up nearly 90% in those 8 days.
That's right. I was looking at that earlier. Yeah, this is just a phenomenal turn. But you know what I think is interesting, because everyone's talking about the delivery of the Amazon van, but I have to tell you, I've seen so many more of these things on the street. I mean, so they're clearly delivering
on the streets
vehicles.
of New York City?
Oh, yeah. And we were traveling over the weekend up in Boston. I saw them up there. Right. I mean, this is, before you would just see one every once in a blue moon.
Like
but I seem to be seeing multiples of them every day now.
Well, and Wedbush raising its price target on the company to 30 from 25. Stock closing, at 24 and change, so just below $25. It's Dan Ives out in a note saying it's finally making a major turn toward executing its longer-term business model.
This is exciting.
Ooh, Ed Rivian, or Ed Ludlow, catching up with the company's CEO on Wednesday. So check out that interview on the Bloomberg. And then just a small cap, Castle Biosciences. Quite a run, up 52% today, closing at $20.30. It's a medical test and diagnostic company. A record jump for this one. A regional Medicare contractor withdrew its proposed policy draft that would have stopped the insurer from covering Castle's cancer test. So the contractor saying it will draft a new policy proposal. So this one was off and running, up 53%. Again, a small cap company, Scarlett.
Yeah, let's move to the big cap space, but stay with the biotech theme here, because Biogen, and I remember when it was called Biogen Edic, was the worst performer in the S&P and the NASDAQ 100. The FDA did approve its Alzheimer's treatment as expected, but there's some testing requirements and some side effect warnings that were a negative surprise for some investors. You can also see the ADRs of Eisai, which is its Japanese partner, declining as well. Levi Strauss falling 7.7%. At one point, it dropped almost 9% after quarterly sales declined by 9% from last year. Also, it lowered its full-year guidance, citing weakness in its U.S. wholesale business and also increasingly price-sensitive shoppers. And Costco closing down about 2.3%, weaker than expected comparable sales for June, even as analysts say that they still view Costco as well-positioned in this uncertain economic environment. People are going to be buying bulk, Matt and Romaine, as they move forward with expectations of a weaker economy.
Well, speak for yourself. I just bought one roll of toilet paper at a time. Let's go look at what's let's go look at what's going on in the yield space right now. I thought it interesting. I mean, it may not look like much here on your screen on a daily basis here. We did see a little bit of buying on the shorter end of the curve. That pushed yields down by about 4.5 basis points on the 2-year. But I thought it was interesting. The activity this week really did seem to be concentrated on the longer end of the curve here. You saw on a daily basis up about 4 basis points on the 30, about 3 to 4 on the 20-year. But on a weekly basis, this was actually the biggest move that we saw from peak to trough in that 30-year, going all the way back to, I think, mid-March here. So there's a lot of repricing going on around the macro conditions and, more importantly, around the expectations, if you will, about what the Fed does.
There's also going to be a lot of new supply next week as well. So some people are saying that bonds are going to likely resume their sell-off.
Only at the very short end. Yeah, I think that's absolutely fascinating to see those moves. And I wonder also how much competition that's going to provide the S&P, right? I mean, if you can get 4% on a 10-year and you can do a lot better with IG, and if you're willing to wade into high yield, no problem. It's going to make the yields that you get on stocks look much worse.
Although we just talked with Vance Howard, right? And he just talked about all the money, $5.5 trillion on the sidelines. He said, but he basically said, trade what's happening. And
$5.5 trillion dollars on the sidelines, Carol?
We're not going to get into that.
Oh my goodness.
But his point was, like, where there's momentum, and when you see, he's really into technicals, and he's like, when you see a stock break out of its 52-week high, you know, there's something behind it that can kind of keep it going. And so he's been kind of
the big mo.
The big mo.
But, you know, I think we heard from Melissa Brown of Contigo earlier, and I really liked what she said, which is the big rally that we've seen this year and the fact that bonds are paying you means that a lot of the risk-averse money has already moved into fixed income. So what's left in the equity market is more risk-seeking money. And they're the ones who are willing to tolerate all the risk and the swings that we're likely to get.
What's going on with Bitcoin? Has it been rising?
That is fascinating.
Yeah, well, it took a little bit of a pause today, though. But, I mean, I was kind of looking at some of the factors, both on the equity side and on the in the fixed income space. I mean, on the equity side, I mean, most people were really going after, I guess, companies that had maybe a little bit more variability rather than just sort of value or the growth trade. And even momentum, I don't think did very well. But the question is, what are you chasing right now, right? I mean, do you really believe in meaningful additional gains beyond what we already baked in the first half of the year?
Well, Vance did, right?
Yeah, he absolutely did. And he also
and we're
said,
already at 15%.
He said when you see, you know, in the first 2 quarters of a year, a move of 10% or so, that you tend to get those gains continue in the second half as well. So, again, he's definitely buying that momentum trade.
I have a feeling we're going to be redoing this conversation a couple of times this summer because so many people made so much already in the first half. If they did catch on, that they're kind of just sitting back now.
Past performance, by the way, is no guarantee of future. Wait, what is it? Past performance is no guarantee of future
returns.
Yeah,
returns.
They're close. Close enough. So, guys, I mean, what's most important to you, though, right? Because everyone's so focused on the macro, on the Fed, and everything else, right? Well, that's where I was going here. I mean, I feel like that's going to probably dominate. You know, no disrespect to Powell, over the next couple of months here, rather than just what
he'll be paying attention to.
Yeah.
Well, and I hope you're right. I think that's good. That's what it should be, right?
Yeah.
We should be focused on earnings instead of being obsessed with the macro like we have been over the past year or two.
Yeah, I mean, we'll continue to be obsessed about the macro. Don't get us wrong, but
I mean,
there's going to be.
We need our jobs.
Yeah,
I mean, what else?
Exactly. That's what we do for a living.
There's going to be a lot of.
I don't have any other skills, Matt. So this is it.
Exactly.
No, but it'll be interesting to see what the banks have to say, and I'm curious about what consumers. How are they doing? What are their balance?
She keeps rotating her chair. She's off screen. Did you guys have your wine segment already a little earlier?
No, we had like 2 last week, so I think we're on a hiatus for a little while.
2 last week. Wow.
We had whiskey and wine.
Wow. pretty fun over there in the little fishbowl.
It makes it difficult not to drink on this show.
Wow.
Can you imagine? I've been a bad influence on that one. Yeah, that one. All right. Have a great weekend, guys.
She's pointing to Scarlett?
No,
that one.
We got
that
a wrap.
one.
All right, we will see you again on Monday. That's a wrap. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals. We will see you again on Monday.
Albert Einstein, visionary made up legendary discovery. Albert Einstein, clever fella called his theory.
All right, so looking forward to this story. Definitely caught our attention. Yeah, I love the AI craze, although I feel like we haven't, Matt, been talking about it as much over the last week, but it might have been that I wasn't around.
I mean, I talk about it every single day.
Well, actually, every time, Matt, like I come in and I feel like you're like, all right, here's my last conversation
because I
with
spend a lot of time on ChatGPT, but I think it's getting more and more wrong. You know, the first few days that I was using ChatGPT,
you were kind of blown away, right?
And also Bing, yeah, I was totally blown away. And now it just gives me wrong answer after wrong answer after wrong. It's like it's trying to get things wrong.
All right, well, we're going to go in a little bit of a different direction. We're going to talk about an AI company, Character AI, and there's a great story by Bloomberg News AI reporter Rachel Metz. You know it's a real thing when we have an AI reporter.
Exactly. Well, I think AI is here to stay, and it's huge. I would agree that this is on the level of the PC or the internet.
Totally agree.
But it's just got to get better.
All right, so let's get into it. This story is among our most read on the Bloomberg. So excited to have Rachel back with us. She's on Zoom in San Francisco. Hello, hello. We had Einstein, courtesy of our producer, Paul Brennan, because there are Einstein and Elon Musk chatbots out there. So tell us, first of all, Rachel, about Character AI.
So Character AI is a company that was created by two guys who used to work at Google. And basically what they built was a sort of general purpose large language model that they wanted people to be able to turn into whatever they want it to be. So you can use it to sort of make a chatbot that is whatever you want. It could be a chatbot that imitates Elon Musk or Taylor Swift or Napoleon Bonaparte or cheese. There's a cheese one. There's a farting unicorn that I had.
Of course, there's got to be a farting unicorn, or else it's not the internet.
Always.
Yeah.
Exactly. Right. I mean, it's very interesting, and some of them have millions of messages sent out. And users have really gravitated to this. It's actually been around since last fall. So it came out a little bit before ChatGPT. And it's just kind of grown really quickly, and it's pretty amazing how much uptake it has seen.
Matt, have you used this?
I haven't used it, but
Okay.
I read your story this morning, and the first, just on the top, I was like, whoa, that's ambitious to try and imitate Albert Einstein. But then I got past the fold, and I saw the screen grab that you included, which is hilarious. And I won't ruin it for anyone who wants to read, but let's just say the chatbot isn't as smart as Einstein. So how do they care about that sort of thing?
I mean, I think their goal is to make these better and better over time. Part of what people need to do if they want to make these individual chatbots really good at imitating, let's say, like a real person or a fictional character that's really well known, is you can add some of your own training data to it. So like if I made an Einstein chatbot, I would first give it like a message that says like, hello, I'm Albert Einstein and I'm incredibly smart, or something like that. So it would spit that out at every single user when they start a conversation. But also you could give it like famous quotes from Einstein, or type in some of his famous writings or something like that, or facts, to sort of like refine it. Because these large language models are trained on huge swaths of data from the internet, which means they might have a lot of sort of info that has been analyzed about someone such as Elon Musk. It might have a lot less about someone like Albert Einstein.
So can I just highlight a couple of numbers? That people have used the Character AI to create more than 16 million different chatbots or characters. And Character AI said it received close to 200 million visits each month. All right. I mean, this is a player, right, in the AI space. I mean, this is huge.
Yeah, I think it's really interesting. It's grown really quickly. It's popular among younger users. Some of its most popular chatbots that people have created are imitating video game characters, such as the plumber Mario. That one has, I think as of the other day, people had sent 36 million messages to Mario. I think what it does, besides like show that people are really interested in interacting with these chatbots, is I think it's bringing up a lot of interesting questions about like who can own a sort of AI personality on the internet if it is imitating a famous person or a famous branded character like Mickey Mouse. And is there any responsibility legally or ethically when you're letting anybody create these kinds of characters?
Well, are they getting sued? Because I would imagine you can't have a Mickey Mouse chatbot, or certainly not Super Mario Brothers, right?
So as far as I know, they're not currently being sued. I think what has happened is they've gotten just a handful of messages asking them to take down some copyrighted photos that people put as an avatar for these characters. So that's something that is a little harder for them to control, because when users create a chatbot, they can choose a photo for the avatar. So they've taken down a few photos in response to those kinds of complaints. But so far as I know, they haven't been sued. And an expert that I spoke to said that legally, there are a lot of issues that this brings up, but there are also really strong protections in the US for things like parody. And it also can look really bad if a company is going after its fan base, essentially.
But even worse if you have, say, Mickey Mouse, just to use the example, and it starts spitting out off-color answers, or even worse, racist or sexist answers, which chatbots have been known to do, Rachel.
Yes, no, that's a really good point. I suspect what's happening is a lot of brands are probably kind of looking, watching, waiting, trying to get a sense of, is this something we should do something about, or should we leave it alone? I mean, there's fan fiction, for instance, which to one of the people that I spoke to about this story, this seems like sort of a new sort of fan fiction almost, at least for the chatbots that are based on fictional characters, and like TV show characters, book characters, that kind of thing. And that is something that people have been really into for a long time. So perhaps in some ways, this is just the next level of that.
Well, and I was thinking, what about Mickey giving out, therapy advice, or a psychologist chatbot giving out therapy advice? I mean, that's when it starts to get in like problematic and worrisome.
No more problematic than a licensed psychologist giving out therapy advice.
Well,
I mean, I've
had a string of pretty bad ones.
All right. To be fair, but that's for another day. But let's just stay in the chatbot space. I mean, that's got to be worrisome.
I mean, I think that can be concerning if you have a chatbot that says, "Hello, I'm a psychologist. How can I help you?" Trying to draw you in. One of the experts that I spoke to for this story was concerned in particular because psychologist is the kind of title that you get with a specific kind of degree. I mean, you have qualifications to attain the name psychologist. It's not just something that anybody can go around calling themselves. So, yeah, that's where it gets a little tricky, and well, TBD on what's going to happen there. I mean, people are already using these things in like a therapeutic fashion on their own.
Yeah.
But this to me did feel a little different. If you have a chatbot called psychologist.
Secretly, I think Matt uses ChatGPT for therapy. I mean, not to ask him, but I think he just has fun with it, and I think it's soothing.
If they can't write prescriptions, they're not real doctors.
This is true. Hey, just got about 30 seconds. The two dudes behind this, though, they're the real deal. And I'm sorry, we don't have much time on it, but they're the real deal.
Yeah, the two of them worked on some really interesting stuff at Google that sort of pushed them in this direction. Noam Shazir, one of the co-founders, he is a co-author of a really important AI paper called "Attention is All You Need." That sort of brought in a new era of natural language processing that we are now seeing a lot of the results of. And Daniel DeFreitas, he created a chatbot named Mina when he was at Google, which was renamed and publicized as Lambda, which a lot of people have been hearing about in recent months.
Well, we're so glad you're here because you're making sense of it. I don't know how the heck you're keeping up with it. Maybe you have a chatbot to help you do it. She is amazing, and just another great story from Rachel Metz. She is our AI reporter here at Bloomberg News on Zoom from San Francisco. So check out her story. You can find it on the Bloomberg and at Bloomberg.com. What?
It's great.
I know. She's incredible. I don't know how she keeps
Good job.
Good job. Great job.
ETFs, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ, we had a late day fade. Stocks finished in the red with the S&P lower by 12, down by about 0.3%. The S&P, by the way, heads into the weekend below 4,400 at 43.98, again down 0.3%. The Dow today down 187 points, a drop there of 0.5%. NASDAQ lower by 18, a drop there of 0.1%. It was, however, an update for the Russell 2000 index of small cap shares. The Russell 2000 was up by 1.2%. 10-year yield 4.06% with a 2-year 4.94%. Gold up $13 the ounce, up 0.7%. Bitcoin today down 0.3%, 30,237 on Bitcoin, while West Texas Intermediate crude was up 2.6%, 73.68 now on West Texas Intermediate crude. Bottom line here, stocks end July, or stocks end the first trading week of July, logging losses as traders parse a batch of labor market reports. Again, recapping here, S&P 500 index down 12, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I feel you, Charlie. I thought it was May 7th, so, you know, I'm with you, baby.
Exactly.
Totally
on to the weekend, though.
Yes, indeed. All right, well, today, JP Morgan out, doubting that a U.S. Bitcoin ETF would be a game changer. Matt, they noted that such funds have existed in Canada and Europe for years already, and that Bitcoin funds overall have attracted little investor interest. And yet...
Yes. Well, you know what? There were a ton of inflows to crypto ETFs last month. Over $500 million, which doesn't sound like that much, granted, but there were outflows in the year before that. So it's turned around, even if it's not a Titanic size yet.
All right, but what they're saying that these things have been around overseas, Bitcoin ETFs, and not a ton of flows.
Yes, exactly. I mean, it's not huge, but I'm just saying you can see a change in direction after BlackRock and others started filing ETF applications.
Which is what we want to talk about. We've got a great guest for our weekly look at the world of crypto. With us is Swan Bitcoin Managing Director Terrence Yang on Zoom from LA. Terrence, hey, nice to have you here with Matt and me. So what do you think of Bitcoin ETF and moves by BlackRock and Fidelity and others when it comes to a spot Bitcoin ETF? ARK has definitely been out there for a long time on that.
So thanks for having me. Great to be here. I think that the JP Morgans of the world may be underestimating how bullish this is. Why? Because even though gold ETFs did not cause a that big of a jump in the gold market cap when the gold ETFs arrived, and Bitcoin so the argument is the Bitcoin Grayscale trust, right? GBTC already has a big market cap. And so therefore, if you look at the gold ETFs and compare what BlackRock and Fidelity and Invesco are doing and others, that maybe there's not much room for Bitcoin to grow. I think that's incorrect. Why? Because gold has been around for thousands of years. It's globally accepted. By the time the gold ETF came out, for Bitcoin to have this kind of institutional support from the top TradFi players, BlackRock, Fidelity, Invesco, and others, is massive. Yeah. This comes, by the way, in the face of the SEC going back to back against Coinbase and Binance a month ago.
But not for Bitcoin, right? I mean, the SEC is after those operators for what they consider to be securities. And I can see that point of view. Even if you argue they're commodities, you have to admit that they could look like securities, and a lot of them are just blatant securities. Bitcoin, however, the SEC has been very clear about it, is not a security. And I can't understand any reason they would have to fight against a Bitcoin ETF unless they think that the price of the underlying commodity is being manipulated.
And that is the core of the issue. Bitcoin is a commodity. It does not meet the elements of the Howey test. It's decentralized. even Larry Fink, who 5 years ago, the CEO of BlackRock, 5 years ago said Bitcoin was basically garbage, has now come around and said Bitcoin is digitizing gold and is a global commodity or global asset. On your point about the market manipulation, the SEC Division of Markets and Trading does need to get comfortable that the surveillance sharing agreements that BlackRock, Fidelity, and all the others, including ARK and Cathie Woods, all their ETF applications, new submissions, resubmissions, they all have these surveillance sharing agreements where they're looking at Coinbase, they're looking at NASDAQ to make sure that there's no price manipulation. Here's the question. Is the SEC going to approve this in light of the fact that Chinese exchanges, I hate to say it, including Binance, OKCoin, and Huobi, continue to do what looks like significant wash trading and price manipulation? We'll see. So I think it's an open question as to whether or not the spot Bitcoin ETF gets approved soon. It will eventually happen. But yeah, the key issue is the market manipulation.
Do you think, Terrence, that those organizations you just mentioned are actively manipulating the price of Bitcoin, any more than some giant banks may actively manipulate the price of silver and gold?
Possibly more so, because even though, for example, JP Morgan has been caught manipulating certain precious metals and fined heavily, these are non-US entities that use a lot of tricks and ways to avoid.
We should point out that these are allegations. It's not. They are not uncommon. I would say conspiracy theory. I mean, that sort of paints it with a nasty brush.
Maybe conspiracy theory. Yeah,
but I'm just saying they're allegations, because we can't say that. You can't make that kind of statement.
We don't know for sure. But if I were a betting man, and I am, I would bet a lot of money that the Chinese exchanges are manipulating the Bitcoin price. It's just very hard to prove, right? But if I had a bet, yeah.
But so Terrence, do you think
point out people were convicted and
Yes, yeah, for sure.
So, yeah.
You're talking about the JP Morgan and silver. Yeah. But in terms of the surveillance agreements, do you think that they're going to is surveillance going to do much here? I mean, if we can't really pinpoint what's happening in terms of potential or alleged market manipulation, is Coinbase surveillance going to be able to do any better?
Especially since U.S.-Chinese relationships are so good right now.
Sarcasm.
Sorry. Yeah, a little sarcasm.
They can help, right? So the argument is that if you have a surveillance agreement, sharing agreement with a big enough exchange, such as Coinbase, having significant market share of the Bitcoin market, maybe that's enough. I personally think the SEC they have an inconsistency, right, where they approve futures, U.S. futures Bitcoin ETFs, but not spot, arguing that the futures Bitcoin prices were regulated on the CME and so forth. But at the end of the day, they all link back to Bitcoin, and the price, if it's manipulated in one sector, does impact another sector. So I think this can be short-term bullish until the market maybe figures out that a spot Bitcoin ETF may be a little bit further away than people think.
Can I ask your expectation for the price? I mean, I know it's a silly parlor game, but you did make a very good point. You did make a very good point, Terrence. If all of the bullish money right now is already in GBTC, then why would someone as massive, a behemoth like BlackRock, want to file for an ETF? They must think that 30,000 is not the limit.
That's one possibility, a very rational basis for doing so. Another possibility that I think is more probable is BlackRock and the others are betting on the fact, the non-zero chance, a significant risk that the SEC will lose, including on appeal, the litigation with Grayscale and GBTC, right? So Grayscale is suing the SEC, saying we want to be able to have a spot Bitcoin ETF. You should let us convert. And the SEC is saying no. So we'll see what the courts say. So if the courts rule in favor of Grayscale, that is going to open the floodgates for BlackRock and Fidelity and others to be like, hey, we're much more credible. We've been around longer than Grayscale and Barry Sobert and his shenanigans, allegedly. And we want our Bitcoin ETF, spot ETF approved as well. Why? Because they see opportunity. Why not file or refile?
Well, like you said about the credibility of something like a BlackRock or Fidelity, and just got about 30, 35 seconds, but I do think about those folks going down to D.C. with their deep pockets and lobbying efforts. I mean, and a lot more influence, correct?
Yes, a lot more influence. However, I don't expect a spot Bitcoin ETF to be approved for anybody, BlackRock or otherwise, by year end. But eventually, within 2 years, absolutely, it will be approved.
So it's just a timing issue.
In my opinion.
Hey, listen. Yeah.
Great.
Yeah.
Well, I was going to say, great to have you on the program, Terrence. And I hope you'll come on my Bloomberg Crypto show as well.
I'd love to. Thank you, Matt.
That is weekly, Tuesdays at 1 p.m. on Bloomberg Television.
Hashtag shameless plug.
Thank you.
But we love it. Terrence Yang, you are great. Managing Director at Swan Bitcoin, joining us on Zoom from Los Angeles, California. No, really smart conversation, right? And very specific in terms of what's going on there. All right, let's head off to D.C., folks. Back to World and National News we go. And Nancy Lyons in our 99.1 newsroom in Washington. Hey, Nance.
Thanks, Carol. President Biden says his administration is taking steps to lower health care costs, and that includes targeting so-called junk insurance plans.
Just imagine if you had a heart attack and you expect your insurance company to pay for it, or you're diagnosed with a cancer and you expect your insurance company to pay for it. But they dig into your medical records, discover you had asthma as a kid, claim you had a heart attack as a pre-existing condition, and then refuse to pay. Folks, that's not health insurance. That's a scam.
Biden says he'll close loopholes on those plans that offer reduced coverage and require companies to disclose if they charge more for pre-existing conditions. Well, President Biden spoke a short time after his national security advisor announced that the U.S. will be sending cluster munitions to Ukraine. The president says it was a tough decision since it could result in civilian casualties. National Security Advisor Jake Sullivan says they've held off until now when the munitions are desperately needed.
Ukraine would not be using these munitions in some foreign land. This is their country they're defending. These are their citizens they're protecting. And they are motivated to use any weapon system they have in a way that minimizes risks to those citizens.
Sullivan says they have received assurances from Ukraine it will use the controversial munitions carefully. Well, the white Texas gunman who killed 23 people in a racist attack at a Walmart in 2019 has received 90 consecutive life sentences. Patrick Crusius pleaded guilty earlier this year. He posted a racist rant warning of a Hispanic invasion of Texas before carrying out his attack. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ as well, all finished lower today with the S&P down 12, a drop there of 0.3%. The Dow lower by 187 points, down by about 0.5%. NASDAQ down 18, a drop there of 0.1%. Stocks slumped after a number of jobs reports this week, tamped down speculation. The Fed will leave interest rates unchanged later in the month. 10-year yield 4.06% with a 2-year yielding 4.94%. So a down day, a losing week as well, but that is not deterring Vance Howard, CEO at Howard Capital Management, who is our guest right here on Bloomberg Business Week.
You know, whenever you have the market up 10% or more in the first 2 quarters of the year, the odds are very, very high that the last 2 quarters will be higher, any from 8 to 10 to 12%. And there's a lot of reasons for this, but we're bullish. We're 100% invested. Now that we're invested, we're starting to rotate our money to different sectors that we think will outperform, or different stocks, and we're very optimistic.
Indeed, the S&P up 14.5% year to date. And by the way, you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Sweet Green shares up again today. Sweet Green up by 1.9% after advancing 15% yesterday, the largest one-day gain in more than a year, after Bank of America upgraded the stock to buy from neutral and raised its price target to $17 from $9. Again, Sweet Green shares up today by 1.9% at $15.35. Again, recapping, S&P 500 index down 12, a drop there of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Had a Sweet Green salad just, what was it, on Thursday? What do you,
are we live on air?
You like chopped? Hey,
no,
this is
I
a
like,
radio studio.
Fresh & Co.
Oh, I haven't tried them.
I go with either the South Beach.
No, that's chopped.
No, the South Beach salad at Fresh & Co. It's delicious.
Oh, all right.
Or the Santa Fe. I like the Santa Fe, too.
Oh, see, and chopped.
There are like 16 different salad stores in the neighborhood.
It's a lot.
Yeah.
It's a lot of salad. You know what is also, there's a lot of? Private credit.
True, private credit's very hot this year.
Nice little segue there. All right, so private equity giant Blackstone, by the way, seeing opportunities for private credit as technology growth slows. That's according to Blackstone Credit's global head of technology investing, who spoke with Bloomberg News private credit reporter Ellen Schneider. She joins us here in our Bloomberg Interactive Broker studio. Really interesting, before we got going, we were telling you that Matt and I are obsessed with the private credit world. So tell us about the head of Blackstone Credit, who you spoke to and what you got from him.
Yeah, so I spoke with Varul Patel, and he, as I said, sees a lot of opportunity in this space.
And Blackstone's a behemoth, right? When it comes to private equity, private credit,
they're
boys.
huge, but they see opportunity in tech specifically because, given the tougher environment and the rate environment being so tricky for tech, valuations and multiples are down significantly, which means that historically unattainable businesses, because they were so highly valued, are now more obtainable for sponsors and private credit alike.
And I guess, is right now a good time to be a borrower? Because rates are high, but these things are floating rates, right? So they can kind of only come down. I guess that's optimistic of me, right?
I think it is a tough time to be a borrower. Private credit is the one lane that's really open right now. We're starting to see other markets rally, and Patel certainly seemed to think that in the back half of this year, we're going to see markets open up a bit more. But I think it is a tough time. This is really the only show in town, and the borrowing.
That's what's so interesting, right? Because after the regional banking crisis, and we just saw banks really pull back, right? Especially for middle market firms, or I'm assuming some of these tech companies, right, that still need, somewhere to get some capital.
Yeah, absolutely. And so they're really relying heavily on private credit right now. And I think that we're going to see the other markets come back, but right now, I think they're going to rely heavily on that for growth and for just buoying liquidity in the short term.
So essentially, the Blackstones of the world can charge kind of what they want, right? What's the delta over public credit? What's the spread?
My reporting didn't really take me there, so I'm not sure I can answer that. But, I think private credit is here to stay because I think that they offer a certainty of execution and discretion. I think that opacity of this market is really attractive to borrowers because they don't have to go through the public scrutiny of being rated.
But did Patel give you an idea of like where they're looking and where they're maybe committing some money or doing some lending to?
Yeah, so the two areas that he outlined that he really finds attractive are cybersecurity. He views that as a really defensive investment.
Right, everybody.
Yeah, absolutely. And then companies that are focused on data mining, but also helping companies utilize the data because I don't think everybody knows how to analyze it and how to put it to use.
So it sounds like he didn't say AI specifically, but data is kind of an AI play, right?
Right. I mean, maybe AI is just not developed enough to really. If you're an AI company, you need to invest a ton, and you're probably not going to be profitable for a while. So, in the big heady days of the dot-com bubble, or even in 2021, I guess it was only about boosting revenue, right?
Right.
But I'm guessing that BlackRock, when they're lending you money, they want to know that you're going to make money and pay them back.
Exactly, yeah. So that really gets to the question of growth versus profitability. And, historically, tech firms have really been focused on growth and on scale and not necessarily on turning an actual profit. And Patel really viewed this as a time because there's contracting of revenues and slowing growth as a point at which firms can really switch that focus to profitability, which means reducing costs, possibly reducing headcount. So it's going to be tough, but it's a good opportunity to finally sort of turn a profit and see those margins and cash flows increase.
What does he think about the IPO market, which has been pretty quiet, although we saw some IPOs as of late, but it's been really quiet this year?
Yeah, he said it has been really quiet and that it's been on the smaller side, smaller firms. But he views it as something that's going to come back. It's always going to be an attractive option for tech companies. It's not something that's going to go away. But private credit sort of offers this opportunity to bridge companies so that they can wait it out and wait for a market that's more opportune.
I feel like that's been one of the big trends of the last few years, if not, the last decade, is that there's been so much money in the private markets, beyond venture capitalists even, that startup firms can stay private for a long, long time.
Yeah, we were talking about that. I mean, remember, Facebook waited a long time.
That's exactly who I was thinking of.
Yeah. But
others.
Now there's such a lull in IPOs that this gives the private credit guys, I guess, the opportunity to go in there, and they're needed and give funding. I guess the only problem they really have is competition, because everybody wants to get into private credit right now.
Yeah, I think it is, it's a bit crowded of a space, but Blackstone is so big. I'm just not sure that anybody can really compete with them, especially when you think about really big companies that would be looking to IPO.
Yeah, and they keep having funds where they can put to work. I am curious, because I said, Matt and I are obsessed with the private lending world and private credit world. What's kind of interesting to you right now? Because it does feel like everybody who comes on, whether it's a wealth manager or, firms just looking to kind of tap into that market. What's kind of top
What are
of
the
mind for
other
you?
hot interviews that you want to get? What are you chasing?
I think the regional bank pullback is particularly interesting. I've been looking into that quite a bit lately. It's created a huge opportunity for private credit, particularly in the middle market space, but also on the consumer side. And I think it's going to be interesting to see this rationalize over time, if banks are really going to come back and be reliant, because according to my reporting, banks have become a bit of a wild card, and they're looking to exit current positions.
What does private credit mean on the consumer side then?
They're getting into space, things like auto loans, stuff like that. They're starting to get
where credit's tightening.
Exactly.
From banks. Yeah.
Yes. So they're getting into areas where really they historically have never been, not just corporate. So I think it's going to continue to grow, and whether or not it keeps all of this market share will be interesting to see as well.
Yeah. Well, I love these stories, and they always trend highly on the Bloomberg. So good to check in with you. Thank you so much.
Thanks for having me.
Ellen Schneider, she's private credit reporter at Bloomberg News here in our Interactive Brokers studio. And again, you can check out her story. It is on the Bloomberg and also at Bloomberg.com about her conversation and interview with Blackstone Credit's Global Head of Technology Investing, Viral Patel. I love that world.
Yeah, very
fascinating.
very cool. And also, I mean, if there's nothing
And lots
else,
of transparency.
well, there's not that. And to me, that's the one problem, right? The opacity, as Ellen said, of the market, and you just can't get the data that you want.
Exactly.
Or that we want.
All right. We want. Carol Massar, along with Matthew Miller, in for Tim Stenovic. This is Bloomberg Business Week on Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Meta Platforms' new social media app, Threads, has garnered 70 million users in just a couple of days after its launch, a sign of enthusiasm that CEO Mark Zuckerberg said, quote, was way beyond our expectations. Threads launched earlier this week as an alternative to Elon Musk's Twitter, which had 237.8 million users as of July 2022, but has also been beset by controversy. Meta Platform shares, though, fell 0.5% today. Twitter has threatened legal action against Meta over its new text-based app, Threads. And with more on that story, here's Bloomberg's Steve Rappaport.
Charlie, in a letter to Meta CEO Mark Zuckerberg, Twitter attorney Alex Spiro accused Meta of unlawfully using Twitter's trade secrets and other intellectual property by hiring former Twitter employees to create a, quote, copycat app. The move ramps up the tensions between the social media giants after Threads debuted Wednesday, targeting those who are seeking out alternatives to Twitter amid unpopular changes Musk has made to the platform since buying it last year for $44 billion. Charlie?
And that's Steve Rappaport reporting. Apple planning a slow rollout for its $3,500 headset. Apple will launch its Vision Pro headset with appointments and in-store promotion in select U.S. markets early next year, underscoring the niche and complex nature of the mixed reality device. Apple shares lower today, down by about 0.6%. And those are some of the top company stories that we are following for you at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
You are listening and watching Bloomberg Business Week. Carol Masser along with Matthew Miller. And should we get a check on news?
Yeah, let's do that. Before we talk about Barbie, because I know you're excited to get to the Barbie dolls.
In the meantime, let's get to Nancy Lyons. She's in our DC newsroom. Nancy, did you play with Barbie dolls?
Oh, of course.
See?
Of course.
Cool stuff. And you're a feminist. I know that.
Yes. Yes. Well, anyway, President Biden is agreeing to Ukraine's request for cluster munitions. Those are munitions that scatter small bombs that could kill civilians if they drop unexploded like landmines. Bloomberg's Irv Chapman has details.
National Security Advisor Jake Sullivan explained the decision in terms of Ukraine expending artillery shells faster than they can be produced, and these are available from existing stockpiles.
Russia has already spread tens of millions of these bomblet across Ukrainian territory. And what we have been weighing is this basic question of civilian harm. But we had to balance that against the risk to civilian harm if Ukraine did not have sufficient artillery ammunition.
Sullivan said Ukraine will avoid using the bombs in civilian areas, and after the war, the battlefield will have to be cleared of unexploded clusters as well as landmines. In Washington, Irv Chapman, Bloomberg Radio.
Still no deal between UPS and its more than 300,000 union workers. Acting U.S. Labor Secretary Julie Su tells Bloomberg the administration is keeping an eye on those contract talks.
We believe that the parties at the table working together, working through hard problems and coming to win-win solutions that's the way it's supposed to work. I believe that's what the parties are doing.
Sue says she's been in touch with those involved. If the workers, who are part of the International Brotherhood of Teamsters, do go on strike, it could cause major disruptions to the country's supply chain. New York Governor Kathy Hochul is deploying dozens of drones to beef up shark monitoring capacity along New York beaches. She says the drones will be distributed to downstate municipalities by state park officials, and the state will cover all the training costs for the drones. Since Monday, 5 people have been bitten by a shark along New York beaches. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Matt.
All right,
and
Nancy.
Barbie.
No, totally. We're all in on Barbie. I should have worn my little pink dress. It's very Barbie. We are going to talk about Barbie in just a moment. In the meantime, did you see the story on the Bloomberg about job seekers paying $3,000 in fees to help find remote-only work? So in other words,
Yeah, it's a great story, and it makes sense to me. You know, if I wanted to get a remote-only job, which is incredibly valuable, right? Imagine you get maybe a New York salary, but you can live in Columbus, Ohio, and
live like a king.
Exactly.
Or queen.
Or you could live in, the mountains and go skiing every day, or you could live on the beach and go surfing every day. So, it would be awesome to have a remote-only job for those reasons, and I think it's worth $3,000. The problem is it's harder and harder to get. So that guy's success rate, getting people those jobs, has fallen drastically.
Yeah, and that's what's interesting, right? Kind of post-pandemic or during, obviously coming right off of the pandemic, people were like, work wherever you want.
Yes.
And that has changed dramatically. We are seeing people come back.
The supply of those jobs has diminished, but the demand is still the same, right?